We'll start then, no?
Okay. Good evening, ladies and gentlemen. A very warm welcome to another virtual webinar organized by the Taxation Committee of the Certified Management Accountants of Sri Lanka, the National Professional Management Accounting Body in Sri Lanka. CMA has always played a lead role in this digital environment to update the knowledge of its members by organizing continuous professional development programs for its members. This is the first tax seminar organized by the Taxation Committee after new council took office, and taking into account of the importance to students, since the syllabus covers taxation at 2 levels, therefore they too have been invited. We are privileged to have the Commissioner General of Inland Revenue, Mr. HMWC Bandara, as the chief guest at this important seminar on highlights of Inland Revenue Amendment Act number 10 of 2021. The presentation will be delivered by Mr. Atula Ranavira, Managing Partner, Ranavira Associates. This will be followed with the panel discussion moderated by Mr. Duminda Kulangamua, Tax Partner, Ernst & Young. And the panelists are Mr. N.R. Gajendran, Senior Partner at Gachma and Company, Ms. Sarala Podagada, Partner, Tax and Business Advisory Services, Deloitte, Sri Lanka, and Mr. Nihal Vijayavardhana, Senior Deputy Commissioner, Department of Inland Revenue. I also warmly welcome CMA President Professor Lakshman R. Vattavala, Vice President Mr. Henaka Bandara, Council members, members of CMA, invitees, ladies and gentlemen. To commence the program, I have pleasure in inviting Professor Lakshman R. Vattavala, Founder President CMA Sri Lanka, to deliver the welcome address. Professor Lakshman R. Vattavala has led Sri Lankan accounting bodies, starting with the Chartered Accountants, the South Asian Federation of Accountants, founder of the Accounting Technician and founder of the CMA Sri Lanka, and SAFA board member and chairman of the SAFA International Relations Committee, a proud receiver of the National Honour Sri Lanka Sihamani in 2019, installed in the Hall of Fame of the Institute of Chartered Accountants, and was awarded the Lifetime Achievement Award by the CMA Sri Lanka. Professor Lakshman R. Vattavala, I am honored to invite you to deliver the welcome address, sir.
Thank you very much, Mr. Gajendra. I think as the chairman of the Taxation Committee of the CMA Sri Lanka, I think I must congratulate you for organizing this tax seminar, which is of great importance to all of us, on the highlights of the Inland Revenue Amendment Act number 10 of 2021. Today, I think is a very, very special day for us because we are connecting once again digitally. I think that's something that has resulted as a result of the COVID-19 pandemic. And this has enabled us to connect with many on the registrations. Of course, we had almost close to 700 registrations, but I think people are still coming in, and I'm sure both our members and non-members would certainly benefit by this. So today we are very proud to have with us the Commissioner General of Inland Revenue, Mr. Bandara, and also associated with him is the Deputy Commissioner General of Inland Revenue, Mr. Hapu Arachi, together with our very, very erudite panel, the speaker, Mr. Atul Ranavira, then our erudite panel, where the moderator is Mr. Duminda Kulangamua, and the other panelists whose names have already been mentioned. And I'm also happy that our Vice President, Mr. Hennayaka Bandara, who is also Vice President of the South Asian Federation of Accountants, is present here together with our council members and members of CMA Sri Lanka, the other invitees, and ladies and gentlemen. Today, as I said, the CMA is really doing a continuing professional development program. This is very, very essential for all our management accountants and also others in the accounting profession, because this is something that have been laid down by the International Federation of Accountants, and they have made it compulsory for all members to have at least a minimum of 20 hours of CPD. So when we are looking at the taxation area, this is a very, very important subject for all of us, because as Mr. Gajendra mentioned, it is not only the members who have to update themselves, but we also have to teach these new amendments to our students. So we are really thoroughly covering these, and I'm sure that our professionals who pass out as management accountants would be able to play a lead role in advising and helping in the companies that they are employed in. So as management accountants, we have a very, very major role to play, because we are really the people who are on the operational field. Today we are called professional accountants in business. Now professional accountants in business are found in many fields, either in industry, commerce, in the private sector, in the public sector. So many fields that we are involved. So today, the biggest number of accountants are professional accountants and business. And I'm very happy that CMA Sri Lanka, the National Professional Management Accounting Body in Sri Lanka, has been able to make a mark. And also not only that, as a national body, we today, the main thing is that we are all looking at foreign things. But today, as a national body, we are proud to say that we are recognized internationally. The International Federation of Accountants, the global body for the accounting profession, is recognizing us. So our Sri Lankans should know about this, because some of them are really wanting to look only at the foreign bodies. But today we are not only saving the foreign exchange, which is in very, very great scarcity, but we are playing a very, very major role and helping not only the accounting profession, the taxation, the management, making businesses more efficient, because cost management, which was earlier cost control, is now cost management. So we are now looking at very, very new things. We have set up the Cost and Management Accounting Standards Board, because today one of the most important things is the calculation of the prices of various products. So we need to set standards for these, and that's how this could be achieved. But also, we must also get the support of the government, because they must make the rules and regulations to ensure that records are being maintained, cost accounting records. Because if you ask the Commissioner General of Inland Revenue, he will also say that is the biggest problem that is facing him, because if we are to get the people to pay their taxes, they must also maintain proper books of accounts and records. And of course, the general statement in the Companies Act is not sufficient. We need to go into more details in order that the cost accounting records and the financial accounting records are properly maintained by all business organizations. This, I think, is a very important change that we need in our acts and regulations, if we are to ensure that all, not only the taxes, but even the banks are having major problems, because they are lending monies, but they are not having the books and records to check what is happening, and they are now taking a lot of security in order to safeguard themselves. So we need to have a change in all these things. And today I'm very happy that we will be, all of you will be able to find out not only the personal tax gains that you will have, but also the business tax gains and the various changes that have been done. So once again, let me thank the Taxation Committee for organizing this. And I'm also very thankful to our Commissioner General of Inland Revenue, the Deputy Commissioner General of Inland Revenue, for their presence today, because the importance that we have placed have been really shown by their presence today. Plus also our keynote speaker, Mr. Atul Ranavira, who has made a lot of preparations to do this, and of course backed by all our stalwarts in the taxation field, beginning with Mr. Duminda Hulangamua. So let me once again wish everyone a very, very successful seminar, and that they will gain a lot, which will be to their personal gain and to their companies and business gain. Thank you very much.
The chief guest, Mr. HMWC Bandara, Commissioner General of Inland Revenue Department, who holds a Bachelor's of Commerce degree from University of Colombo and Bachelor's of Laws LLB from Open University of Sri Lanka. He is a successful tax administrator who leads the Inland Revenue Department to harness revenue to fund public expenses by proactively implementing quality efficient and streamlined customer-centric services for harnessing taxpayer revenue via voluntary compliance and tax avoidance of the shadow economy by effectively implementing tax legislation using modern and empowering employee engagement, while implementing the government fiscal policy for the SME sector. I invite Chief Guest Mr. HMWC Bandara, Commissioner General of Inland Revenue, to deliver his address. Over to you, sir.
Thank you very much for your introduction. Good evening, everyone. It is with immense pleasure for giving me the opportunity to address at this virtual webinar on the highlight of Inland Revenue Amendment Act number 10 of 2021. I am grateful to Professor Laxman R. Wattavala and CMA officers for inviting me as the chief guest for valuable occasion. I would like to extend my gratitude for celebrating 21st anniversary of your institution. The Inland Revenue Department is having a proud history of 89 years. And today it makes a pride-worthy contribution to the state revenue. In accordance with the IRD's vision, my first and foremost duty as the Commissioner General is to develop the taxpayer-friendly environment in the country by enhancing the relationship between the stakeholders. I am well aware that the present restriction and social distance stand as a barriers for our strong relationship, but these measures are very important so as to control the COVID-19. I hope we can soon overcome this pandemic and build the stronger relationship again. My team always work in professional, responsive, fair, open and accountable manner by helping you all to comply with your tax obligation. I am expecting your cooperation as well by complying to the tax laws in this difficult time. We have collected the total tax revenue of rupees 423 billion during the year 2020. For year of 2021 up to the month of June, our revenue collection was rupees 228 billion and it represents 99.5% achievement of the revenue target given to the department. Compared to the previous year in the same period, there is an 8% increase in the revenue collection. Indeed, the credit for this achievement should go to the valuable taxpayers for the self-compliance shown by them during this trying era of pandemic situation. You all are aware that government has taken the decision to simplify the tax policies in accordance with the vistas of prosperity and splendor to facilitate taxpayer better and to make the tax administration more efficient. In line with those objectives, certain taxes have been abolished, such as nation building tax, economic service charge, and debit repayment tax. In addition to VAT rate was reduced to 8% and its registration thresholds has been increased to rupees 300 million. Individuals' personal relief was increased up to rupees 3 million and granted certain other reliefs, qualifying payment exemptions as well. Pay was removed and APIT has been introduced on option basis for resident but citizen employees. Employees who are having a taxable income are required to register with us and should comply with the income tax laws and procedures accordingly. The department issued a few notices forecasting them to get into the self-assessment tax system. And I believe that most of the employees have complied successfully. At the same time, my officers also are taking action to collect information from the employers and to register the other liable employees who have not got them voluntarily registered. However, if they have not complied as required by the law, they may be subject to penalties and interest in the future. Therefore, I request all the liable taxpayers to do the needful voluntary, avoiding such penal action. As proposed in Budget 2021, the department has restructured large taxpayer unit and experienced staff officers were allocated for those units. Now L2 files are closely monitored by the officers giving due consideration. The taxpayers in the SME sectors are entitled to so many tax concessions and relief that have been offered through the changes in tax policies in order to develop the sector. The department will monitor their tax compliance as well to get their due tax payment while allowing them the said concession given by the government. Income tax areas payable by the SME sectors are to be written off as per the Amendment Act number 10 of 2021. My officers are working on it by preparing the certain guidelines and identifying the qualified SME and their tax in areas. I request you all to assist my officers by providing the required information and details if requested to write off taxes in areas and keep the tax records clean. Simplification of tax system is now linked with the RAMI system of the department. Taxpayers can comply with the tax laws in e-form, and the department has updated most of its service to connect with the taxpayers through e-platform. I take this opportunity to request all of you to use the facility of RAMIs for all tax compliance activities, especially as enacted in the England Amendment Act number 10 of 2021. It is mandatory for limited liability companies and public corporations to submit their return to e-filing. Department highly encourage other type of taxpayers also to use the e-filing facility to submit their returns. The e-filing facility is going to open soon to submit the return for year of assessment 2020-2021, and all regional office, metro branches, and the head office are ready to help you in this task. I believe e-filing is one of the best practice in tax administration, as it is convenient for both of us, especially during this pandemic situation. From this year, we have opened the e-filing for set return 2021 and 2022 also, and you may easily submit your original set or revised set through e-filing now. In addition to that, the department commence online tax payment platform for tax payment in collaboration with state and private banks. And you can make your tax payment easily through this online tax payment platform. Further, the facilities have been provided to claim tax refund and to submit the appeal through the e-service. Further, England Revenue web portal, call center, 1944 hotline, England Revenue Department Facebook page, YouTube channel have been created to provide the information and assistance for your matters. Please use these facilities effectively and pay your correct tax liability for the betterment of the country. Further, I emphasize that some profiles of taxpayers are not updated in the Ramesh system. And that will be the reason for they face that difficult to fulfill their requirement. And department has to face the barrier to communication. The main reason for this delay is non-update in the profile of the taxpayer, such as correct email address, contact numbers, correct corresponding address, and so on. Therefore, I request the taxpayers and their authorized representative to update the profile through e-service of the IRD. I know that many tax agents also are participating in this webinar, and it is my duty to appreciate your professional work since you are playing an important role by assisting taxpayers to meet their compliance obligation. Your duty is very much important for the department as well. I am expecting the integrity of the tax practitioners and believe that you all may extend your fullest support by working professionally for your client while complying with the tax laws. I must thankful to the CMA for organizing this webinar, as taxpayer education and awareness play a vital role in the self-assessment tax system. I believe that you all are updated with the new provision and amendment of the Act and expected that you are paying correct and due tax payment with adherent to the tax law. We all have so much of challenges and having great opportunities as well. And I am expecting that participants may effectively use these opportunities for making their correct tax payment as challenge. Before winding up my speech, once again, extend sincere gratitude to SMA management and its able president, Professor Mr. Lakshman R. Vatawala, and wishing you all the success in your future endorsement. Thank you very much. A good day.
Thank you, sir. Next on agenda is a talk on the highlights of the Inland Revenue Amendment Act number 10 of 2021, done by Mr. Atula Ranavira, Managing Partner, Ranavira Associates. He is a fellow member of the Institute of Certified Management Accountants of Sri Lanka, the Institute of Chartered Accountants of Sri Lanka, and the Institute of Accounting Technicians of Sri Lanka. He holds a honors degree in business administration from the University of Sri Jayawardenepura. Mr. Ranavira counts over 4 decades of experience in the accounting profession. Further, he is a consultant to Ascent Secretarial Consultants Private Limited, engaged in company secretarial services. In addition to the audit practice, Mr. Ranavira has a wide experience in tax, company secretarial services, in investment advisory and promotions. Over to you, sir.
Thank you, Mr. Kajendran, for your nice introduction. I would like to thank Professor Vatawala as well for the invitation, as well as the Commissioner General, Mr. Bandara, for his valuable minute. For me to continue my session, my role is to highlight the new Inland Revenue Amendment Act. I will share a PowerPoint presentation which I have prepared on this. Let me share the PowerPoint presentation. Is it shared?
We can see it. Yeah. Okay.
All right, okay, right. I'll continue then. Yeah, today my role is to highlight the Inland Revenue Amendment Act. Now in this PowerPoint, anyway, I'll manage to finish off my role within 1 hour's time period. Now this amendment bill, it was gazetted on 18th of March 2021. Then there were a couple of Supreme Court cases. 3 parties went to the Supreme Court against this. Then accordingly, the Supreme Court determination is given on 7th of April 2021. Then after incorporating the required amendments proposed by the Supreme Court, they passed this as an act on 4th of May 2021. And the Speaker signed it on 13th of May 2021. As a result, this act is effective from 13th of May 2021. But even it is effective from 13th of May 2021, there are several amendments which are backdated. Some of those things to backdated to 1st of April 2018, 1st of April 2019, then 1st of January 2020, and 1st of April 2021. We'll discuss about those dates later. Now I have prepared a small index for easy references. I have prepared a small index what I am going to discuss. First, I'll be talking about the withholding tax on remuneration, then withholding tax on other payments. Then I'll be talking about the deductible expenses and disallowable expenses. Then tax exempt income, that is a tax holidays. Then post-COVID-19 economic recovery special tax reliefs. Then various reliefs and qualifying payments introduced. Then there are some summaries what I have prepared, how these amendments are affecting to individuals, then how those are affecting to partnerships, and how it is affecting to trust, then companies. That's a summary of that. Then for easy references, certain definitions, interpretations, I have attached as annexures. First, I'll start with withholding tax. Withholding tax, first I'll cover the withholding tax on remuneration. Now, when we are talking about the withholding tax, this is the main amendment which has happened through this Amendment Act. Majority of the withholding taxes have been removed. First, we will see the withholding tax changes which relate to the remuneration. Employees remuneration of resident or non-resident persons or Sri Lankan non-citizen employees. For easy understanding, I have divided this into two, how it is affecting to the resident Sri Lankan residents people and Sri Lankan citizens. This is tax residents and Sri Lankan citizens. Then the other category, non-residents and non-citizens. Then the time period, I have divided the time period into 3 categories. First, from 1st April 2018 to 31st December 2019. When we take the resident Sri Lankan citizens, during this period, still they were liable for payee tax. The withholding tax called payee tax, they were liable for withholding tax on their remuneration. When we take the second category, non-resident or non-citizen people, they were also liable for payee tax if they earn any remuneration in Sri Lanka. Then we'll take the second period, 1st of January 2020 to 31st March 2020, that 3 months time period. When we take this 3 months time period, none of these two parties were liable for withholding tax on remuneration. Then we'll take the current period starting from 1st April 2020. Then with relate to that period, resident individuals and Sri Lankan citizens are not liable for withholding tax. But even they are not liable to withholding tax, they have introduced a special tax called Advanced Personal Income Tax, APIT. This is applicable for resident individuals and Sri Lankan citizen individuals on voluntarily basis. If they wish to, they can give a letter of consent to the employer asking him to deduct this particular withholding tax called Advanced Personal Income Tax. Then in the case of non-resident and non-citizen people, that is mandatory. APIT is mandatory for them. Then we'll take the second category. Now this is the remuneration other than the terminal benefits. If you take the terminal benefits, withholding tax on terminal benefit is totally abolished. Totally abolished with effect from 1st January 2020. No more withholding tax on terminal benefits on any individual with effect from 1st January 2020. Now we'll move forward to see what are the changes with relate to other payments. Now, when we, with effect from 1st January 2020, withholding tax on these payments are abolished. With relate to the resident person, whether individual or non-individual corporate body, any resident persons, dividend, interest, discount charge, rent, royalty, natural resource payment, premium or retirement payment, on the service fee paid on services rendered by an individual. On all these categories, withholding tax is totally abolished with effect from 1st January 2020 with relate to the resident recipients. If the recipient is a resident, no more withholding tax on these things. Then they introduce another type of advance payment called advance income tax. Advance income tax. There the word personally is not there because this is applicable for individuals as well as entities. Introduction of optional advance income tax on resident taxpayers. When we take the resident, now we are covering the resident taxpayers. In the case of resident taxpayers, this is optional. With effect from 1st April 2020, resident taxpayers who receives the above payments, if they wish to, they can make a request to the payee to deduct the withholding tax called advance income tax and remit that to the Inland Revenue Department. This is legalized under Section 84, capital A. That's a new section, 84A. Now saying that, we'll move, we'll see the resident individuals are resident persons withholding taxes on other receipts. Following payments to any person, any person continue to be liable for withholding tax. What are these payments? In the case of any person, resident or otherwise, winning from lottery, reward, betting and gambling, 14%. Gems sold by any person in a gem and jewelry, National Gem and Jewelry Authority auction, 2.5%. Now these two withholding taxes are continuing with relate to any person, whether resident or otherwise it is continuing. Now, earlier we had a withholding tax on partnership allocation. Now that partnership allocation withholding tax is abolished and they introduce a new tax on the partnership. The 8% withholding tax on partnerships removed and introduced 6% income tax on partnerships. That is not withholding tax, but the partnership can give the credit to the partners for them to deduct that from their, for them to enjoy the credit. Though it is not a withholding tax, they can give the credit. Now we'll move to non-remuneration on other payments, withholding tax on other payments, continuation. Payments to non-residents. Now we were talking about the residents. Now this is this table which I have prepared is for payments to non-residents. Now I have given three columns: source of income, then what is the withholding tax rate, then whether the withholding taxes to be paid or not, to be deducted or not. Now when we, this is non-residents. Interest on any loan given to any person in Sri Lanka or Sri Lanka government, central bank approved foreign currency bank deposits, special deposits accounts in rupee or foreign currency. These deposits are special deposits. If a non-resident person make a deposit in these special deposits, whether it is rupees or otherwise, foreign currency or rupees, the interest is tax-free under third schedule to the Act. But this tax rate, the withholding tax rate is still there. 5% withholding tax rate is there. Even the withholding tax rate is there. As it is exempted under the third schedule, the payee need not to deduct the withholding tax. Then interest other than the above and discounts. If there are any interest other than the above, not being interest on loan or not being interest on special deposits, then those things continue to be taxed at 5%. Now, as an example, if a non-resident come and invest some money in a bank in a normal fixed deposit, in a local bank, in a bank operating Sri Lanka, in a normal fixed deposit, not a special deposit, then the interest is liable to tax at the rate of 5%. But if we'll give a loan to anybody, no withholding tax, no tax on that. I think at the time of legislation, this is an error, because now when they are giving, when the legislation gives withholding tax exemption or tax exemption on any loan interest, it is fair for us to give this exemption for any bank deposits also. Next category, dividend charge, natural resource payment, rent, royalty, premium, service fee, and insurance premium. There's a withholding tax rate of 14%, but you need not to deduct because under section 3, schedule 3, it is exempted. Next, gem sold in a National Gem and Jewellery Authority auction, even non-residents are liable to pay 2.5% withholding tax. Then services fee on land, sea, air transport or telecommunication, if the recipient is a non-resident person, continue to be liable at the rate of 2%. Then the next category, profit share allocated by a partnership to a partner. Earlier we had 8%, now not applicable because it is totally abolished. Totally abolished. I have given small, some further notes. Those are the things what I have explained. Therefore, I'm not going to read those special notes what I have given in red color because I have already explained. I'll move forward because we have to manage the time. General rule of allowable, I'll move to the allowable and disallowable expenses. Allowable and disallowable expenses. Now 2.1, what I have given is the section given, the law given in the Inland Revenue Act, Main Act. According to the Main Act, in calculating a person's income from business or investment, expenses to the extent they are incurred during the year by the person and in the production of income, from the business or investment shall be deducted. This is an extraction of section 11. Under this, the charities, why the charities are not allowing? Because it is not a deduction, not a expenditure incurred in production of income. As a result, generally charities are not allowable. Right. Then further, no deduction shall be allowed in the case of capital expenditure. Obviously, that is not revenue expenditure. Then under section 10, there are certain items listed in section 10 which are not specifically not allowable. It says specifically disallowed. But over and above this section 10 and 11, there are certain special allowances given in section 12 to 18. Those are special allowances, special deductions. Now, related changes. Now, this is the existing main act. Now, we'll talk about the changes. Now, one change is this contributions to the gratuity fund. Contributions to the gratuity fund. Now, contributions to gratuity fund by employers which are not included into the employment income are also newly included into the disallowable list. Now, if you are not including the gratuity fund contribution as a taxable income of the employer, the employer can't deduct it. But anyway, why we are not including it as a special exclusion? As a result, we need not to disallow it. Please be noted, I have given a note, please be noted. Though it is included into the employment income, it is not taxable as employment income as it is excluded under section 53F. We are including that to the employment income, but the tax law says it is to be excluded under section 53F. As a result, we are not taxing. Therefore, the expenditure continue to be allowed. Then I'll move to next slide, cost of funds. This cost of funds, I think this section is, to me, it is an error of the legislator. Now, what it says is, cost of funds of financial institutions incurred on loans provided to new businesses commenced after 1st of April 2021 by an individual successfully completed vocational education is made an allowable expense. Now, that means the bank, if a bank provide a loan to a person, individual who has completed, successfully completed a vocational education and start a business. If it is the situation on that loan, for a bank to give a loan, bank should get finances from outside. Now, on those outside finances, there are some costs, finance cost. Now, this section says that finance cost is allowable. Actually, need not to say, because under section 11, anyway, it is an expenditure incurred in production of expense, production of income. Therefore, it is anyway allowable. Now, next item, repair and improvements. Now, with related to this repair and improvement, as we know, there's an upper limit of payment. Either 5% of the tax written down value of the asset, or in the case of business building, in the case of any other asset, 20% of the tax written down value of any other assets. Now, in this case, repair and improvements. Now, what has happened? Now, a lot of people couldn't claim these expenses when the asset is getting older and older. You have to incur more and more repair expenses. Now, what has happened, as these objections were there, they removed the word repair from this section. Now, in future, the repair expenses could be allowed without an upper limit. But improvement expenses, because improvement expenses may contain capital nature expenditure as well. Therefore, improvement expenses may continue with this. In the case of improvement expenses, this upper limits will continue. Next item, 200% deduction facility for marketing and communication expenses. For a country's development, For commercial sector development, marketing development, the marketing and communication expenses are very much important. Even you produce something, you have to do marketing and communication for you to sell the item. Therefore, government has recognized, the legislator has recognized the requirement of marketing and communication expenses and says, if you link marketing and communication expenses subject to some conditions, you are eligible to claim 2 times of the expenditure. Suppose you spend 1 million, you can claim 2 million in that year. But there are few conditions. Right? This is under section 15, capital A. Under section 15, capital A. Right. Next item, 200% deductions for research and development expenses. 200% deduction for research and development expenses. Now, what is that? Now, research and development is also very much required for a country's development. Therefore, government has already, through the main act, they have given this relief. Now, once you incur some expenses, you are eligible to deduct 2 times of that. But this is to be ended up by 31st March 2021. Now, what has happened? Through this Amendment Act, they extended the time period by another 2 years. As a result, any research or development expenses incurred up to 31st March 2023 is allowable. Now we'll move to next slide. Allowable expenses, next one, finance costs. Now, as majority of us face, now when an entity is running with financial difficulties, you obtain more and more financial facilities. When you obtain more and more financial facilities under this section 18, there's an upper limit of claiming the finance expenses. As per the law, as per the main act, in the case of a manufacturing entity, you are eligible to claim the interest attributable to the loans equivalent to 3 times of the share capital and reserves only allowable. If the interest is greater than that, it is not allowable. Now, in the case of non-manufacturing entities, this limit is 4 times, weightage is 4 times. Now, what has happened with this amendment? They increased this 3 times on manufacturing to 4 times. Now, for any type of business, the weightage is 4 times. Now, what you have to do, you have to see what is the share capital and the reserves, take the total. From the total, you multiply by 4. Suppose the share capital is 1 million and the reserve is 1 million, then the total is 2 million. That is the equity. 2 million is the equity. Then 2 million into 4 times is 8 million. Then interest on loans up to 8 million. Interest on loans up to 8 million is allowable for tax purposes. Now, this section is applicable for entities who are having share capital. If there's no share capital, this section is not applicable. Now, as a result, if we'll see the definition of companies, even these NGOs and other associations, charitable institute, everything comes under companies. As a result, now even those who comes under companies, no share capital on those things. Therefore, for those entities, this section is not applicable. They can deduct any amount if it is incurred in production of income. At the same time, if you take branch officers, overseas companies registered in Sri Lanka, for that also this is not applicable, because now under the new act, under section 69 of this new act, all branch officers are resident companies in Sri Lanka. If you see carefully, if you read carefully the branch of the section 69, all branch officers become resident companies in Sri Lanka under the new law. As a result, for branch officers, they don't have share capital in the entity in Sri Lanka. Therefore, they also need not to worry about this limitation. Now we'll move to losses. Now, as you know, any losses incurred in a business or in a source where the tax rate is concessionary tax rate, lower rate, you can't set off that interest against a higher tax in income, but they relaxed it only for SME who becomes a major company. If you incur this loss during in a SME during the lower tax rate period, once it becomes a major company, even then the tax rate will go up by from 14% to either 18% or 24%. Still, you can deduct it with effect from 1st April 2021. Then the next one is enhanced capital allowances. This is a new section in this Inland Revenue Act to promote the investment. They have invest as a measure of investment promotion. They introduce some 100% or 150% or 200% capital enhanced capital allowances. These enhanced capital allowances are over and above the normal capital allowances. You can claim the normal capital allowances separately. In addition to that, you can claim these enhanced capital allowances. They are under the section 6, the schedule 6. Now what has happened? These things were to be expired by 31st March 2023. What has happened with this Amendment Act? It is increased by another 2 years. As a result, you can enjoy this enhanced capital allowances if you are qualified for that. Mainly, the minimum investment is about $3 million US, and there are some conditions in that. If you qualify for that deduction, you can deduct that type of expenses incurred up to 31st March 2025. Then the milking machines. If you acquire any milking machine, you can depreciate that. This is not enhanced. This is the depreciation rate of 20%. They increase to 50%. 20% means 5 years, they reduce to 2 years. As a result, during the first 2 years, they can deduct it. This is a backdated section. It is effective from 1st April 2018. Right. Now, that's all with relate to the allowable and disallowable expenses. I would like to move to the next most important section, that is the special tax exemptions. Because under the original law, there wasn't any tax exemptions, hardly any tax exemptions. Now they have newly introduced a lot of tax exemptions. If I'm mentioning about the tax exemption, now in Sri Lanka, there are only 2 entities who are authorized to give tax exemptions. One is Strategic Development Project Act. The other one is the Inland Revenue Act. Only under these 2 legislations, you can enjoy tax exemptions. Under BOI, no more tax holidays. But if you are enjoying any existing tax holiday under the BOI, you can continue up to expiration of that. Right. Under Strategic Development Project Act, depending on the nature of the project, it could approve up to 25 years tax exemptions. And also it covers almost 12 to 14 acts, different acts of tax acts. Right? I'll move to the next category, that is under the Inland Revenue Act. As we are talking about the Inland Revenue Act, I'll move to that. What are the tax exemptions available under the Inland Revenue Act? Sorry, the slide moved. Right. Gain on realization of land. Now this is, the government realized that a lot of the property developing companies are in a bad shape. And a lot of people, buyers, they have already advanced money to these property development companies and they are not doing well. As a result, government thought best thing is to amalgamate, let these companies amalgamate and build a bigger company. To facilitate that, rather than requesting them to amalgamate, government proposed to start a new unit trust under the Colombo Stock Exchange called Real Estate Investment Trust. Real Estate Investment Trust, REIT. Now, once they form, now they are in the process of forming Real Estate Investment Trust. Once they form this Real Estate Investment Trust, these property developers, they can transfer their existing assets to that unit trust. And for that, they can buy units. Once they buy units on those things, once they transfer these properties to buy these units, on transfer, whatever the taxes applicable on transfer is not payable. It is exempted under this section. It may be capital gain or mostly business gain. Those on that they need not to pay tax. At the same time, when this unit trust declare dividend, that dividend is also tax free. And once you dispose units, the gain on that is also tax free. Next item 322, any amount derived by non-resident person as a payment of aircraft software licenses or other related services from Sri Lankan airline. When a non-resident person supply these services to Sri Lankan airline, the amount what they are receiving, it says the amount what they are receiving is tax-free. Actually, there's a wording error in the law. It should be the profit or gain on that transaction is tax-free. But the word what they have used in the legislation is any amount derived. Next, the gain and profit earned or derived from any person from agro-farming. There's a 5-year tax holiday on agro-farming commencing from 1st April 2019. 1st April 2019. This agro-farming, the word agro-farming is defined in the law. Under section 195, it is defined. Then if you use this, your agro-farming produce for an agro-processing activity or manufacturing activity. If you use your produce, agro-farming produce for an agro-processing or manufacturing activity, then the profit attributable to that agro-processing or manufacturing is liable to income tax. Still, out of that tax liability, there's a 25% relief. Out of that liability, there's 25% relief. You have to pay only 75%. Then the applicable tax rate on the profit attributable to the manufacturing or processing, the rate is only 14%. Then agro-farming and agro-processing are defined in the law, but these definitions are so poor, not comprehensive enough. For you all to see these definitions, I have given these definitions in the slide number as last few slides. I just copied down these things from the Act and reproduced in the slide number 37, 38, and 39. If we'll have excess time, we will read those things. But those things I have given in this. At the end of this session, we will be sharing this PowerPoint presentation to everybody who is following this seminar. Then the next one is providing IT and enabled services as may be prescribed by the Commissioner General. This is with effect from 1st January 2020, no ending date. Now this as prescribed, the IT of course anybody can understand, but the enabled service a bit difficult to understand. Therefore IT and enabled services are already prescribed by the Commissioner General by way of Gazette number 2234/6 of 29 June 2021. 29 June 2021. You can log into the IRD website and get it downloaded. Right? But unfortunately, this prescription is not comprehensive enough. I don't know why it has happened like that. I don't think it is covered certain IT sectors which are to be covered with that. As an example, a couple of days back, a client of mine asked a question about running an e-platform. Running an e-platform. Nowadays, a lot of people are doing that. Maybe for doctors channeling, or maybe for some trading activity like tea auction in Colombo, or something like that. But as per this, the software development is exempted, but running e-platform is looks like that it is not covered with that definition. Therefore, this gazette notification, the people who are engaged in those industries may have to come out with their issues and discuss with the Inland Revenue Department, Commissioner General of Inland Revenue, and see whether we can get it amended, get the gazette notification amended. Next item, any services rendered in or outside Sri Lanka to any person to be utilized outside Sri Lanka, and there is payment received in foreign currency and remitted through a bank to Sri Lanka is exempted from tax without an ending date, with effect from 1st January 2020. Now, this section covers only services rendered. Only thing, the beneficiary should enjoy the benefit while being in abroad. Is received in foreign currency, the service provider should receive that in foreign currency and remitted to Sri Lanka. Suppose the service rendered, the person who rendered the service is having a bank account. We say we render this service to a Singapore client. Then suppose I'm giving this service and I have an account in Singapore. Then no problem, I can get this money into the Singapore account in foreign currency, then transfer to Sri Lanka. Even I get it transferred to Sri Lanka through a bank and immediately encash it to rupees. I get it to a rupee account. No problem, it is qualified under this section. That is why it says received in foreign currency and remitted through a bank. The remitting part, it won't say that it has to be in foreign currency. It won't say that it has to be in foreign currency. Right. Now, then we'll move forward. Next item. Any foreign source where such gain or profit are earned or derived in foreign currency. They are not only services. Now see the earlier one, only services. Now here it says any service, anything. For any foreign source, the source may be any source. Where such gain or profit are earned and derived in foreign currency and remitted through a bank to Sri Lanka. Now this is a section which you can utilize even for you to convert your black money into white. This is something like a amnesty, because source is immaterial, any source. Therefore, you can get remitted those black money into Sri Lanka. If you have anything in abroad, you can get it whitewashed. Then next is any vocational educational program. Now, if you are running any vocational educational institution, if you double your student base and maintain a minimum of that doubled quantity for next 4 years, then for all 5 years, then you enjoy tax exemption of 5 years. Tax exemption of 5 years, effective from 1st April 2021. Next item, export of gold, gem and jewelry exempted from tax without an ending date, exempted from tax. Even you can get down the raw gemstone, cut it, polish it and export it. That is also covered with that. Next item, any amounts derived by a non-resident person. If a non-resident person derived money from laboratory services or standard certification services, that is totally tax-free, like this standard certificate issuing. Right. Next one, religious institutions, any grant and donations receiving by religious institutions are exempted. Grants and donations only. Next item, gain and profit received or derived from business of new undertaking. This is applicable only for new undertaking. New undertaking commence on or after 1st April 2021, not by splitting or reconstruction of existing company. There are few conditions. Now, this new undertaking may be a sale of construction material recycled by itself. Now, in this construction industry, a lot of raw materials are waste in raw materials are there. You can start a business of recycling those raw materials. Then your income out of that is tax exempted for 10 years. For 10 years, you can enjoy tax exemption. You can use that material for your own construction work at the market value. Then that the profit attributable to the reconstruction, recycling is exempted. Not on the main construction, but the profit attributable to the recycling is exempted. Next item, under any, there are 5 items. This any business commence on or after 1st April 2021 by an individual after successful completion of vocational education. Suppose I, as an individual, followed a vocational educational program and start a new business, then my business profit is exempted for next 5 years. Next 5 years. Next item, the profit of manufacturing boat and ships by resident individuals. There's a tax exemption of 7 years, or the profit attributable to ship and boat manufacturing is exempted for 7 years. Next item is solar or wind power renewable energy project income. But this section, to qualify with this section exemption, you have to do more than 100 million megawatts, minimum of 100 million, 100 megawatts, 100 megawatts. 100 megawatts mean nowadays per megawatt, you may have to spend minimum of 2 million US dollars, roughly about 2 million. If it is solar, it may be about 1.5 million. For mini hydro, it may be 2 million plus, right? Wind power also may be 2 million plus, right? Then this is a huge investment. You get 7 years tax holiday. This is open for any person, resident or otherwise. Next item, new undertaking is an undertaking commence on or after 1st January 21 for construct and install communication towers, related appliances and services which relate to that. Technical services which relate to that. But now, when we consider today's session, we are on online. Therefore, this communication facility is very much important for a country's development. In a pandemic situation like this, it is very much important. Therefore, the government wanted to improve the communication sector. For that, they have given this exemption of 5 years. Next item, the letting premises as warehouses for bonded warehouses and offshore trading. That is international business related warehouse supplying service is exempted for a unknown time period effective from 1st April 2021. These warehouses should be connected with Colombo Harbour and Hambantota Harbour. In that area, it has to be connected with this harbour operation. Then I have prepared a small summary. I don't think I have time to explain this summary. Now, everything what I have explained, I have put into a small summarized note for easy reference. The effective date is there, the industry is there, effective date is there, and the exempt time period is given. You all can read it less early, but these are the things what I have explained already. Then there are 2 slides like that. Then I'll move to the other exemptions. Now what we discussed is the exemption on business profits. Now next is exemptions on dividend income. Exemptions on dividend income. Now we'll see what are the exemptions. On dividend income paid by a resident company to a member out of dividend received. If a company declare a dividend out of dividend received, that dividend is totally tax-free for the recipient. It is tax-free for the recipient. If we'll declare any dividend out of any profit, if we'll declare a dividend to a non-resident member, it is tax-free. That means in the case of a non-resident member, any dividend income is tax-free. Next item, BOI entities with relate to international businesses, international trading. Any BOI entity engaged in following businesses are exempted. The dividend paid by those BOI companies are exempted. These are international trade related activities. Interport trading, offshore businesses, front-end services, headquarter operations, and logistical services. All these are international trading related services. Then they are exempted. Now, what I can't understand is this exempting non-resident persons. Now see this second item, item number 2, non-resident persons are totally exempted from dividend income. I think this is an error by the legislator. I don't think the legislator understood what the repercussion on this. Now, we are having 44 double tax agreements with other countries with whom we are having regular transactions, business transactions. Now, when we give this type of exemptions, normally the accepted thing is sourcing country should, in the sourcing country, you should pay the tax. You should pay the tax in the sourcing country. Now, the sourcing country is Sri Lanka. We are exempting that dividend. Then, normally what's happening, when that person paid the dividend tax in the sourcing country, he get a credit in his other country, connected country. Now, then ultimately the connected country's income will get reduced. That particular investor is getting benefit. Ultimately he's not getting benefit because he is paying in Sri Lanka and claiming the credit there. Ultimately, anyway, he is paying. Now, even in this case, what will happen? Now, Sri Lanka is not charging with tax on that. Then this person take the entire 100 into his country. Then his country tax it and he pay the tax in his country. Ultimately, Sri Lanka income is diverting to another country. I think this is, they could have to think about the bad effect on this. That hasn't happened. Unfortunately, that hasn't happened. Then next item, dividend from or gain from realization of shares. Now this is realization of shares on in a non-resident. Now suppose I being a resident person have more than 10% shares of overseas company. It is substantial participation in more than 10% shares, minimum of 10%. If I'll dispose those shares, the profit out of that disposal and the dividend out of that investment is totally tax-free in Sri Lanka under this section. It is tax-free in Sri Lanka. Then next item, dividend and gains on realization of units in that rate. The real estate investment trust unit disposal is totally tax-free, as I mentioned earlier also. Now I would like to move to the interest income. In the case of interest income, also there are some exemptions. Charitable institutions engage in various services, in-house services, residential services. Then they are exempted, like orphanage and all. Then their interest income is tax-free. Then the next one, any person outside Sri Lanka, overseas lender. Now, as I mentioned earlier also, when a foreigner give a loan to us, when we are paying the interest to that foreigner is exempted from tax. As I mentioned, under third schedule, it is exempted. Next item, the deposits in special bank accounts by non-resident persons or even resident person. Any person, when they deposit money, even in our case, when we deposit in a special account or foreign currency account or even rupee account special, the interest is tax-free. The next 2-3 items, the next item is also special deposits. Next one, interest income of any welfare society is tax-free. Interest income of welfare society is tax-free. Next item, interest income of a multinational company on a special deposits, what they are maintaining for internet, for import-export trading activities. On that deposit, if they'll get interest, that is tax-free. That is tax-free. Then next item under the interest and discount realization gain earned by a non-resident person. This is government securities. Now, if a non-resident person invests in government sovereign bonds or including even any person in sovereign bonds or development bonds. Next one, in Sri Lanka, international sovereign bonds, and all those things, as it is something to do with the government and the government finances, they made it exempted. Then next item, 3 to 14, interest or discount accrued or derived or no after. Now, this is with related to the Samurdhi Bank. When a Samurdhi Bank gives loans to Samurdhi beneficiaries, now for those things, now sometimes they go and some of the banks go and make deposits in securities and treasury bills and treasury bonds with the government. On those interest income, they are exempted. Some of the banks are exempted. Next item, with relate to any person, if some person gets something from a President Fund or National Defense Fund, that receipt is exempted. If a government corporation receives something through funds voted by Parliament or through consolidated funds, an arrangement through the government, it is tax-free. That receipt is tax-free. Right. Then I would like to explain a little bit about this post-COVID-19 economic recovery special tax relief, as Mr. Bandara also mentioned about this. Actually, this is an additional work to the Inland Revenue Department, because now in this case, as I shaded with yellow color, responsibility is with the Inland Revenue Department. We need not to apply to the Inland Revenue Department. Inland Revenue Department, the Commissioner General or the Assistant Commissioner should give these reliefs. Commissioner General shall write off, in the case of SME, shall write off the taxes up to 31st March 2019 and penalty and their own. Then next item, if I'm mentioning, Assistant Commissioner shall not amend any assessments with relate to these SMEs. They can't amend the assessment, but under this, it covers only SME. No need to be an entity, any SME, right? Now, for you to see what's an SME, you have to refer section 196 of that. If you refer section 196 of that, bit difficult to understand that, but you better read that leisurely and try to understand it. Any SME. Then this third item, Commissioner General shall not impose any penalty or initiate criminal proceedings on these things, but there we have to do something. We have to file the 2019-20. We were supposed to file the 2019-20 tax return before 30th June 21. Before 30th June 21. The date has already passed. If we have done that and make the payment of tax by that day, if we have done that, Commissioner General shall not impose any penalty and shall not take any criminal proceedings on that. Then I would like to move to the relief and qualifying payments. Now reliefs, as we know, reliefs are available only for individuals. Once you arrive the assessable income, from assessable income to arrive the taxable income, you are supposed to deduct the relief and qualifying payment in the case of individuals. In the case of entities, they are eligible to deduct only the qualifying payments. Under reliefs, the personal allowance of 5 lakhs increased to 3 million, employment allowance of 7 lakhs abolished, senior citizens interest income relief of 1.5 million abolished, then relief on individuals and partners foreign currency income, there was an exemption up to 15 million foreign currency income that is abolished because now that benefit is there without an upper limit. Therefore, they abolished this. Anyway, we can claim, we can enjoy a benefit on any amount. Then under relief, they have introduced a new relief, which may be important for a lot of us, expenses relief. There are 5 types of expenses. If you incur any expenditure under the any 5 types of expenditure, the total up to 1.2 million a year is eligible as a relief. What are the expenses type? Health expenditure, but including medical insurance of your own self. Then education, local education expenses of yourself as well as your children's. Then interest on housing loans. Then contribution to approved pension schemes. Then expenditure on purchase of listed shares or financial listed shares or financial instruments. Now, under this 4th one, you need not to retain those investments. If you have even 1 lakh, you can buy shares today. Tomorrow you can sell it. Day after tomorrow again you can buy. You can keep on doing that and account for this 1.2 million. What is needed is only the board note, because the law says expenditure incurred, that's all. Then next item, if you fix solar panels on your roof and spend money for that, up to 600,000 rupee capital expenditure is allowable for tax purposes as a relief. Suppose the expenditure is greater than 600,000, the excess amount you can carry forward and enjoy on a subsequent year. At the same time, if you finance this by way of a bank loan, the capital repayment is qualified for this. Whatever the capital repayment incurred in that year, you can deduct as a qualify as a relief. Right. Next, I'll move to qualifying payments because we have only limited time now. Qualifying payments. Now, qualifying payments, any individual or entity is allowable. Now, under that, resident individuals to establish. Now, suppose I go and help some of the beneficiary families lady to start a shop. For that, whatever the money what I am spending, I can deduct as a qualifying payment. Suppose I spend 1 lakh, I can deduct that 1 lakh as a qualifying payment. Right? Then only thing, the buy-in in a resident individual, not for corporate bodies. Then next one is with relate to the film industry, either film producing or construction of cinema or upgrading of cinemas. There are some figures they have given. Then those could be deducted as qualifying payments, but subject to 1/3 of assessable income. Whatever the excess, what you couldn't deduct in that year, you can carry forward for next succeeding year and so on and claim it. Then the other thing in this, some of these expenses, now first on film, not less than 5 million. Not less than 5 million. In the case of new cinema, not more than 25 million. In the case of cinema upgrading, not more than 10 million. Right. Next one is financial institutions merging expenses. Now, if you incur any expenditure to merge 2 or more financial institutions, those merging costs are allowable as a qualifying payment. They are also 1/3 of subject to 1/3 of assessable income, but you can carry forward and claim the excess amount. Next item, By a public corporation, certain expenses by public qualifying payments by public corporation are allowable. I'm not going to explain that. Then next is to manage the time. This is a summary what I have prepared for individuals separately, companies separately, partnerships separately, trust separately. In the case of individuals, no more withholding tax on interest income and dividends. No more tax relief on senior citizens' interest income. The remuneration, no more withholding tax. It is no more mandatory withholding tax. And employment allowance, no more employment allowance. And tax concessions given on pension, gratuity, EPF and EDF approved compensation, you are getting that tax exemption, concession. Then relief on qualifying payments, as we said, reliefs and qualifying payments are available. Reliefs and qualifying payments are available. Next category, individuals, resident or non-resident, what are the tax rates? Now I have divided that into two categories. One is taxable terminal benefit. The other one is non-terminal benefit income. In the case of terminal benefits, individuals first 10 million 0%, next 10 million 6%, balance 12%. In the case of non-terminal benefits, first 3 million of taxable income 6%, next 3 million 12%, balance 18%. These rates are applicable for residents as well as non-residents. However, the income on betting, gaming, manufacturing and selling or import and selling of liquor and tobacco is liable at the rate of 40% flat rate. You can't enjoy the lower rate on that. At the same time, gem and jewelry sale in local market and electricity supply into the electricity board it is taxed in at a maximum rate of 14%. At a maximum rate of 14%. Then partnerships. The partnership capital gain anyway 10%, even individuals capital gain up to only maximum of 10%, at 10%, not maximum 10% flat. Then in the case of partnerships, next 1 million non-capital gain profit plus 1 million, no tax, excess is liable at the rate of 6%. Then trust. Earlier tax rate was 24%. Now the new tax rate is 18%. However, the capital gain, the tax rate is flat rate of 10%. Now, in the case of companies, this is a small summary. There are a lot of 14% concessionary rated items. SME, and some of these things are existing one. Certain export businesses, certain specified undertakings, then education, promotion of tourism, construction services, agro-processing and healthcare, then dividend received by resident companies. When a company receives dividend from another company, that recipient company should pay income tax only at the rate of 14%. Then certain BOI companies, when they sell their products into the local market, 14%. As import replacement. Then certain gem and jewelry sales in local market 14%. Then if you list your company shares in local shares in Colombo Stock Exchange, you are getting 14% tax rate for up to 31st March 2025. Then gain and profit of supply of the electricity to the electricity board 14% again. Then on manufacturing, 18%. Other than the, suppose there's a manufacturing where the actual tax liable rate is 14%, you can enjoy 14%. If those lower rates are not applicable, in the case of manufacturing, 18%. Then betting, gaming, then that manufacture and import and sale of liquor, tobacco, 40%. Capital gain, 10%. On any other profit of a company, 24%. Then this application of amendment and effect they are on to the companies. Now there are some, this is a special thing, tax rebates. Now, after calculating the tax, you are getting 50% rebate on the tax amount if you list your shares in Colombo Stock Exchange. That is a special thing. Then the next one, dividend, there's a 25% rebate for 21-22 and 23-24, 50% rebate on such companies. That is another rebate. Then conditions to fulfill the companies. Now to enjoy these things, there are some conditions to fulfill. Need to increase the export by 30%. If you increase the export by 30% in 21-22, then 2021, then you can enjoy those things. Then in the year 22-23, you have to increase the turnover by 50% of 2021. 22-23 turnover should be 150% of 2021. Then only you can enjoy these things. Then undertakings, agro-farming product produced for your processing or manufacturing. As I mentioned, the manufacturing or processing tax rate is 14% in that case. But out of that tax, you are getting 25% rebate on that. I think that's all. I'm sorry I took 5 minutes extra, 1 hour plus 5 minutes. That's all which I have to tell. In the next 3, I have reproduced the interpretation of agro-farming, agro-processing and all. Okay, thank you.
Thank you very much for your wonderful presentation, sir. And I hope we can share the same with our participants.
Yeah, sure.
Next on agenda is a panel discussion moderated by Mr. Duminda Kulangamua, Head of Tax Partner, Ernst & Young, and the Deputy Vice Chairperson of the Ceylon Chamber of Commerce. He has served as the Chairman of the Faculty of Taxation of the Institute of Chartered Accountants of Sri Lanka for last 4 years. Joining us as panelists are Mr. N.R. Gajendran, Senior Partner at Gachma & Company, Sarala Kodagoda, Partner, Tax and Business Advisory Services, Deloitte, Sri Lanka, and Mr. Nihal C. Vijayawardena, Senior Deputy Commissioner, Department of Inland Revenue. Over to you, Mr. Duminda Kulangamua. We invite you to send your concerns, questions, and clarifications on the chat or via question and answer. Thank you.
Yeah, good evening, ladies and gentlemen, and thank you very much, Gajena, also Professor Vattavala, for arranging this session for the benefit of your members, the general public, and those professionals who are in practice. And I think Mr. Atul Ranavira made an excellent presentation. I hope my internet connection is clear because I'm not in Colombo. I'm quite a distance away from Colombo. If there is any, that's fine.
We can hear you.
Yeah.
That's fine.
Okay, thank you. So, Mr.
Vattavala, just 1 minute. Mr. Atul, if you can remove the presentation, that will be good. Yeah, we have half an hour, so you can do that.
Right. So I've not taken much time. I want to pose the first question to Mr. N.R. Gajendran. Gaj, you're on line, I believe. Gaj, are you there?
Yeah, I am online. I'm online.
Yes. So I want to present the first question to you more on the macro side and on the tax law in particular. How do you see these amendments that have been brought about to the Inland Revenue Act, both in terms of, I mean, they're substantial in nature compared to what was already intended from the Inland Revenue Act when introduced in 2018. It was single company tax rate. Now it has gone to multiple company tax rates. It was going to be without tax holidays. It was only going to be on enhanced capital allowance. So taking the overall perspective of the changes, what were intended in 2018, how do you pursue a single company tax? Is it more difficult to companies, or is it better for the companies to have multiple tax rates or one single company tax rates? Is it better for have concessions? Or what is your sort of overall view on that, on these changes?
Basically, I think the concept and the philosophy with which the Inland Revenue Act that was introduced in 2017, maybe that was under the multi-IMF program, they introduced a new act. That philosophy and the concept has been totally changed, and is a completely paradigm shift to another status quo. In fact, many people, including some of the chambers, was of the view that exemptions should never again be the order of the day in Sri Lanka. And some of them were trying to vehemently promote that idea with the government and with the oppositions and things like that. But all that has been changed. Now there is a whole heap of exemptions, differential tax rates and systems. I think if you see how the macroeconomic fiscal policy, together with the monetary policy that's being formulated, and as the way we are proceeding, there is less reliance on fiscal revenues. Basically, like any other business or individual entities, government has few sources of revenue or few sources of funds. By and large, if you group it, comparison with any business or any individual, it's you have earned income, unearned income, and gives grants and all those things. In addition to that, any government has the capacity to increase the stock of money. That is, you call printing of money, or in American terms, it's quantitative easing. So I think at the moment, if you see with all the amnesty that is being brought in, with all the write-off that is pronounced in the Inland Revenue Act, and also in the Finance Act, they are writing off certain taxes. Basically, the inland revenues functions also being substantially scaled down. There may be a question even for the revenue, do you need so many revenue officers going for in future when so many taxes have been abolished, and even the remaining taxes also there is cleared and made up to date. This may be also maybe an indication or insinuation on the various administrations. So basically, they are going towards taxes based on sectoral and industrial classification, and they are trying to direct the tax policy not mainly fundamentally to raise revenue, but to direct the economic activities of the country for investors to enter into business and go on. They also, I think, participants, if you have watched, followed what has happened, they were, once a decision is made, they were firm with the decision, and they were pronouncing that they will go with consistency. But that also seems to be changing, because if you see the number of gazette notification issued for Exchange Act is about 18 from year 2020, and also certain policy firm decisions being varied and scaled down, which in the last few days of announcement in certain areas, may be an indication they are re-looking at it, because government needs revenue. So we will never know whether they will go back to the revenue raising mechanism, particularly because our revenues in 2020 was less than about 600 billion compared to 2019. And even if they are, I think so far from the Commissioner General, what he said, they have raised about 298, 300 billion in the first 6 months. And overall, I think the first 4 months, they have the total revenue raise is about 400 odd billion, little less than 500. So you might end up with 1.5 trillion. where we were projecting about just 2 trillion for 21. So there is a mix and merge forward backward approach that is being undertaken. So very difficult to say how the direction is going to be for the future.
Thank you, Gaj, for that very explicit.
That is they will revenue raising mechanism will have to come back sooner than later.
Thank you, Gajen, for that candid view, as always, giving both sides of the coin. I want to turn to Mr. Nihal Vijayawardena, Deputy Commissioner, Inland Revenue. Nihal, you can hear me, right? Yes.
Yes.
So, Nihal, my question to you is that, with all the changes that were proposed and very sort of explicitly explained by Atula, one area that there was efficient tax administration, if I may say, was in the withholding tax section. When interest income, dividend income, and employment income all became scheduled taxes like in the UK, and no further returns required in one form, sort of source deductions. Now you go back to returns and no withholding tax. What has your experience been? I know you're a revenue officer, sometimes some questions you can't answer openly, but has the revenue increased in these areas after withholding tax on, especially on employment income, PF has been taken off in the last 1 year? And what kind of administrative burden there is that you think for the department's point of view?
Yes, actually, as far as withholding taxes are concerned, it's easy for tax administration as well, because tax will be collected at the source. Therefore, at the time where the taxpayer receives relevant money, we can collect the tax payment. So it's easy for us to collect. Anyway, the government policy has been changed, and they have removed withholding taxes from all the payments making to resident person. Now withholding tax available only for payments to non-residents. Therefore, certain exemptions are also introduced, because we can't administrate tax files for non-residents, especially the dividend payments to non-residents. The exemption granted, otherwise it is not practical, because the companies cannot select who are the non-residents, who are the residents when they are declaring dividends. So therefore, consequential amendments, consequential policy changes also being made. But anyway, by covering all the payments through the Inland Revenue Act number 24 of 2017 with effect from 1st April 2018, the withholding revenue has been generated, a considerable amount of withholding tax revenue generated to the department. But we cannot comment on that matter, because there are so many tax refunds are also created because of these withholding tax provisions. So administratively, we will face certain difficulties when settling their refunds. Anyway, now the tax liability is available for individuals if their income, if their taxable income is more than 3 million. Most probably it may be more than 4.2 million. Therefore, the relevant category of taxpayers, the handling of relevant category of taxpayers is easy for department rather than collecting taxes at source. So the revenue should be revenue details should be analyzed, but not yet done it actually. So we'll see positively, because the department has taken all actions already to register the relevant employees who have not voluntarily registered. We have issued certain notices as well to register voluntarily and obtain their TIN and submit their returns. But there are certain taxpayers, certain employees who have not registered, and the department is try to get them into the tax net. So in future, we can comment on that matter, whether the abolition of withholding tax is good or bad based on the revenue figures. But practically, there are some pluses and minuses in administrating these withholding tax provisions.
Thank you, Nihal. Thank you very much. May I now turn to Sarala? Good evening to you, Sarala. My question to you is, from your point of view as a practitioner, by abolishing these withholding taxes and PAY, etc., and especially a tax on dividend, how do you see are taxpayers more burdensome, or do the taxpayers like it?
Good evening, Mr. Lanka. I think in the case of individuals who are having only employment income, I feel that they feel that it is more burdensome, because earlier it was deducted by the employer at source, and then they had no further obligation as regards to that income. But now they have to open a file and meet their quarterly tax payments, file their SET, etc. So that in that regard, yes, it is more burdensome to individuals. I think the worst implication is on the dividends, because it has created a lot of consequential issues, because it was pretty straightforward when the 14% withholding tax was applicable by the company which was distributing the dividend. But now, since it is taxable in the hands of the recipient, it's creating a lot of issues, because they are eligible to claim losses against this income. And also they can claim certain expenses as per Section 11. And also they have to deduct certain, the taxes also has to be deducted. So previously, once the initial dividend was distributed, any subsequent distributions down the line were tax exempt. So now it's not so, and each recipient's situation is very unique. So they have to assess each situation to establish as to whether that dividend is exempt or not in the hands of the recipient. Yes, so I would say overall it's more burdensome, but the removal of withholding tax on service fees probably was a welcome change.
So Sarlo, I'll have two questions from you, because you have been waiting for a long time. So my second question to you is on this, in general, with the intention of the finance bill to abolish, or rather grant certain kinds of amnesties to people who have not paid their taxes. And also this act also grants certain relief to those persons, whatever category they may be, SME or otherwise, reliefs in terms of outstanding taxes and assessments. Do you think that encourages people to be more compliant, or it discourages people to be more compliant? I'm asking a bit of a controversial question, but these are two views of this. What's your view?
Yeah, personally, I feel it's unfair to the people who do comply. Because you're kind of encouraging the people who have not complied by doing something paying something very small, and bringing them into the kind of like a compliant status. So it is probably unfair to the people who have complied. So even in the case of the SMEs, where there is a application to write off certain taxes up to the year of assessment 18-19, as to why it's only applicable to SMEs, why is it not extended to individuals and say partnerships? It could have been, why is it only targeted towards the SMEs? It could have been more broad-based, I feel.
Yeah, no, I think you did explain a very good point on that. I agree with most of what you said. So there is a question from the audience, and I think I will pose it to Nihal, because we are listening to Atula making the presentation. Atula, I'll come to you with one question, but there are more questions to Nihal. Nihal, there's a question from the audience asking you, currently the manufacturing tax rate is 18%. And if it is a BOI company who has got 20% concessionary rate, at that time concessionary rate, but now it's not concessionary any longer. Can he apply the 18% rate? And number two, in the event in 2 years' time that the government increases the rates back to 24% or 28%, then can he, if he qualifies for the lower rate under the Inland Rate 18%, can he go back to the BOI rate in the event the government increases taxes? So I don't know. It's a very hypothetical question. Probably I'm putting it to you.
Yes, this question is receiving from most of the BOI companies now, and it was discussed and conveyed to the message conveyed to the policy makers as well. So the department will issue a required guideline or a public ruling clarifying whether the transitional gazette is applicable or if there's any change, because the transitional gazette says if you are taxing under a lower rate provided in the BOI agreement, you can apply that rate. But this rate is provided under the Income Tax Act itself. Therefore, legally, the rates given in the act is prevail over the gazette notifications. But anyway, we will clear those doubts through an amendment to the gazette notification or through public ruling for the relevant taxpayers. We have requested certain details and confirmation also from the relevant interested parties. So this matter will be cleared definitely.
Yeah, I hope you will decide favorably.
Yes.
Yes, thank you. Yeah. My next question is to Gajen again before I come to Atula. Gajen, you know, this agro farming, agro processing, manufacture has always, I think Nihalas can contribute if he wishes to, but I'll ask Gajen the question first, has led to a lot of confusion, litigation, disputes, etc. Now, this act goes on to again defining farming, processing, and manufacture. Do you think such definitions are actually reliefs given, or does it result in more contentious debates and more cases, etc.? So therefore, should there be just 2 rates, or should there be 3, 4 rates like this and defining? I mean, will it lead to more disputes than real concession?
I think the disputes will proliferate because now, if you see, maybe certain definitions and classification has been done without the full and complete knowledge of what is agriculture, right? And things like that. I think, remember some time ago, I think it was also mentioned in one of the forums many years ago, when bigotry was not considered by Department of Inland Revenue as animal husbandry or something like that. Where there were, so the laws had to be amended. But if you see here, there are matters like, agro farming doesn't involve any packaging, and dehydration is coming under agro processing. My question is, even the primary produce or whatever it is which comes under agro farming has to be taken to the market, right? So there has to be some form of package, right? So what does it mean? So there absurd situations are there. And in the case of manufacture, food is always, anything edible is either produced or processed, So this manufacture terminology is going to come and complicate it further because the manufacture terminology is generally being given. So, but this is we have to understand the policy behind it. The government is recognizing agriculture and the food security issues, right? And if you see, because of the policies of the governments for agriculture and agro processing, that there are locally processed food available in Sri Lanka than what was there 20 years ago. Those days now, even when you're flying, you used to know there are no flights. You used to get the orange juice was generally processed in Sri Lanka. Many years ago, those were not from Sri Lanka. So this has helped for the industry in the agriculture, and where certain people have, gone backward and forward in the supply chain and helped the farmers and, in that process. So this is the policy direction is good, but I think it's slightly complicated. And when this type of things are, generally by nature of the administration, the relief that the preferential treatment that is to be given to the taxpayer is denied because of these things, so that there can be disputes in going forward.
Thank you, Gajen. Atula, my next question is to you. Based on a presentation question I want to raise from you. What is your view about this appeal procedure that has been changed in the 18 law? It was always there and now changed for the first 6 months, where the time period given for appeal at the department itself is reduced. Of course, this has been extended by this law to a 6 months period, but then still is less than what we had earlier. Will there be more cases ending up in the appeal commission as a result? And we know the appeal commission cases are hardly heard today, right? So will result in more time taken to settle tax disputes than what it is in the current law?
Yeah. Anyway, before this amendment, the time what they have given is not sufficient at all.
Yes.
Therefore, now luckily this time they increase the time. That's a good thing, but I think administrator need more time to finalize. At the same time, need not to give 2-3 years, but appeal procedure, appeal commission. Now, appeal commission earlier we were having only one committee there. Now there are 3 committees in operation. With that situation, I think now anyway because of this COVID there are some issues, but after that I think with these 3 committees it will activate more. I don't think there will be any issue in future once the COVID situation is wiped off.
Okay, so what you're saying is that there can't be any bottlenecks or any delays in the appeal procedure. So going to the appeal commission is all right. More time for the appeal commission is okay. Is what you're
that's
saying.
all right. What I feel is that's all right. Only thing at present there's a big backlog there.
Yes.
But time to come, they'll be able to clear those things, because at that time we were managing with 1 and now they have 3 committees. I think we'll be able to manage efficiently now.
Right. So, Professor, I have 2 more questions. If you give me time, I have 2 minutes more. My next question is to us, finish off these 2 questions to Sarala. Sarala, you saw quite an unusual amendment in this year's law with regard to deducting of expenses. Now, one is marketing expenses. Now, you know, traditionally, advertising expenses were disallowed for tax. Then they allowed it to be 25% deduction. So it was a bit of a bad area. But this time there is a 200% deduction, right? So, Sarala, what is your view on that? I mean, earlier people try to classify expenses out of advertising to marketing, etc., 100%. Now, there will be more inclination to classify more expenses under marketing. So, overall, what is your view on the principle and the policy behind this? Will it lead to a lot of disputes, or is it a good thing or a bad thing?
It's good, and also not only is the expense allowed, I think capital nature expenses are also allowed in addition to that.
Yes, correct.
And then there's an additional 100% deduction for a 3-year period. So it's a good, I mean, it was a surprise provision. I mean, it was not mentioned in the press notices, nor was it mentioned in the budget or anything like that. It came as it came fairly as a bit of a surprise, but probably good, because this is a time that we need to, take things to market, make up goods and services heard of, known, etc. So in that sense, it encourages people, and also the spend is to be on products. In the case of additional deduction, it has to be on products which bring a 65% local value addition. So in that sense, it's good to promote the local products in the local and foreign markets. So in that sense, it's an encouragement to the businesses to spend on things. And also the requirement is that you use local agencies or local input for these marketing expenses. So probably I think it is good, but it could be probably misused to a certain extent if the the criteria, etc., for the additional deduction, etc., is not stipulated on time, and then there are certain record keeping requirements, etc., which have to be mentioned. So that we are still waiting for those clarifications to be reissued.
Thank you. So my final question is to Nihal. Nihal, there's a question from the audience. Is that with so many individuals now filing income tax returns, and especially on employment income where APT deducted, there is no provision for directions. So invariably, a lot of people might have the qualified payment deduction that is coming 1.2 million as a refund. Is the department equipped, given the track record, I'm sorry to say, given the track record, is the department equipped to release these refunds to taxpayers with the excess paper tax by individuals?
Yes, actually, according to the provisions of the Inland Revenue Act, there's no provision available to issue directions. Actually, if it is there, we can issue directions, because when administrating the Inland Revenue Act with effect from 1st April 2018, also there were so many requests received from taxpayers stating they are ending with refunds. Therefore, they requested tax directions instead of deducting withholding taxes. But still, it was not incorporated to the Inland Revenue Act. Therefore, we can't administrate the type of practice. But what you have said is correct. Most of the resident or non-resident citizen or resident non-citizen individuals, if they subject to APIT or any type of withholding tax, they may end with refund due to expenditure reliefs and other qualifying payments. So those things actually, from the department side, the refunds has to be finalized immediately, and if not finalized within a period given by the Act, the department has to pay interest on refunds. So, according to the current situation, the department is not ready to issue any tax directions, but preparing to release the refunds as same way. And if there's any delay, the department will have to pay interest as well according to the provisions of the Act.
Right. Thank you, Nihal, for that. Professor, it's 8:04. I have taken 4 minutes more than allocated time. So over to you, Professor.
Yeah. Thank you. Let me thank all of you all. And I'm sure that it was a very good presentation and also a very good panel discussion, which should have really enlightened all of participants. So now I will hand back to our chairman of the taxation committee so that he can maybe do the balance program.
Thank you very much, sir. As we come to the end of today's proceedings, now I invite Mr. H.M. Hernaka Bandara, Vice President of CMA Sri Lanka and Vice President of SAFA, to deliver the vote of thanks. Over to you, sir.
Thank you, Mr. Purendra. Our most valued invited speakers and panelists, ladies and gentlemen. As mentioned our President in his opening remarks, we were able to invite the experts to talk about on the new amendments to the Inland Revenue Act in order to enhance your knowledge. And my task is to appreciate and recognize their contribution towards another successful seminar. With that note, on behalf of CMA, first let me thank Mr. Bandara, Commissioner General of Inland Revenue, for accepting our invitation to be with us as the chief guest and articulating the obligation of taxpayers, tax practitioners, and the officials of the department. Mr. Bandara's participation in this program is a source of encouragement to our institute. Let me also thank Mr. Ranavira, Managing Partner, Ranavira Associates, for the technical and professional analysis provided and explaining the new amendments in a very simple manner, highlighting the positive impact, weaknesses of law, and implication of the amendment. More importantly, I'm sure that his analysis on the new amendments would have been benefited to all of you to clear any doubts and confusion. I also would like to thank Mr. Domingo Hulangamua, the moderator, for the good job done, and all panelists, Mr. N.R. Gajendran, Ms. Sarala Podagoda, and Mr. Nihal Vichevardhana, for the expertise shared with us and providing clarifications to the extent possible within the limited time allocated. We greatly appreciate your support. Let me also thank our President, Professor Lakshmana Vattabala, Council Member Mr. Uendran, and the CMA team for all the arrangements made to have a successful and timely important event. Finally, I would like to thank our Council members, Mr. Jayasekara, Mr. Rochira, and all of you, ladies and gentlemen, for your participation. And hope to see you all again. Take care, stay safe. Thank you. Good night.
Thank you very much.
Thank you.
Yeah, that's
Thank
the
you.
end of today's.
Thank you. Thanks a lot, everyone. I think it was a very, very great seminar that we had. I think Mr. Hennaga Bandara gave the closing stages and thanked everyone. So I must thank everyone. I think Atula, you did a very, very excellent job. So we will make available your presentation to all the participants together with the video, so that they will all be able to have a look at it and maybe go through it. And I'm sure that will help them. And also our moderator, Mr. Duminda Hulangamu, Gajendran, and also Mr. Nihal Vijayawardena from the department. I think we really had the full support from the Department of Inland Revenue, from the Commissioner General to the Deputy Commissioner General, and for your participation. And I'm sure that you will always use the expertise of the management accountants to help you in your task, to maybe to collect more taxes and also to give more advice to our taxpayers, so that it will help them. So thank you very much, and we wish you all the very best. Thanks and bye.
Thank you, everyone. Thank you.
Thank
Bye.
you. Thank you, Atula and all. Thank you.
Thank you.
Thank you. Thank you, Professor.
Thanks, Night.
Thank you.
Thank you, Mr. Jayasekara. Thanks, Atula. Okay, we will end up then. Good.
Thank you, sir.
Right. Thank you. Thank you, Gajendran. You have done an excellent job as
Thank you.
chairman of the taxation. So you have to organize more seminars of this nature. Budget seminar is also coming. Okay.
No, we'll do it.
Right. Okay. Right. Okay. Bye.